Welcome to our Forex and CFD Market Focus Report for Friday, October 4, 2013. It's been a very active trading day, so let's go ahead and take a look at our calendar. Earlier today, Bank of Japan decided to keep interest rates and monetary policy unchanged. The BOJ decided to aim to add approximately $60 to $70 trillion in reserves to its balance sheet annually. BOJ Governor Kuroda pledged to add additional stimulus as required in the future. Most traders now expect Bank of Japan to add additional stimulus to the economy starting in the second quarter of 2014 or later. We also saw a move lower in German producer prices at both the month-on-month and year-over-year levels. We saw an improvement in the Lloyd's employment confidence in the UK, and we saw a pullback in Eurozone PPI. That was in concert with the pullback in German producer prices. Later in the North American session, we're going to get remarks from Fed official Fisher. This follows remarks from Fed officials yesterday, including Fisher, Kocher Lakota, and others. We're also going to see remarks later today from New York Fed President Dudley. Of course, today's all-important September non-farm payrolls data in the U.S. have been delayed, probably until October 11th at the earliest. That is on account of the U.S. government shutdown. We're going to see some PMI data out of Canada. Let's go ahead and take a look at our different asset classes today. In the energy complex, we can see gold here trading against the US dollar right around $13.15 per ounce. Gold made a little bit move of a higher yesterday, bouncing off of multi-week lows earlier this week. Gold is trying to gain a foothold here during the ongoing closure of the U.S. government. Many larger traders actually expect the price of gold to continue to depreciate, however. The premium in the Chinese market on the Shanghai's Metals Exchange is below $10 above international prices. That's down from $40 in July. So many Asian traders and investors are expecting gold to move lower. Here in the silver market, we see silver underwater a little bit today, currently trading right around 21.62 to the US dollar. Moving over to the energy complex, we see Brent futures here are moving higher, currently trading around 108.56. One reason for the move higher today in energy prices is Tropical Storm Karen is approaching the U.S. Gulf Coast. The storm is expected to reach the coast this weekend. Some major international oil companies such as Chevron, BP, Royal Dutch Shell, and others have suspended operations in the U.S. Gulf on account of the approaching storm. The move higher here in the oil market also indicates some traders believe the shutdown in the U.S. government will be short-lived. The longer the U.S. government shutdown continues, the lesser the demand for crude energy there will be from the U.S., which is, of course, the world's largest consumer of energy and oil. West Texas Intermediate futures here, you can also see, are popping higher, trading right around the 103.43 area. Of course, WTI is more susceptible to Tropical Storm Karen and, of course, is more sensitive to the ongoing U.S. government shutdown. Let's go ahead and take a look at some FX action. It's been quite interesting today. The Australian dollar is once again moving higher. We can see the Australian dollar is outperforming all other currencies at this time. Interestingly, however, we see the Japanese yen is also quite strong today. It's one of the first times in recent trading sessions that we can see both the Aussie and the Australian dollar and the Japanese yen both moving higher today on the same day. Let's go ahead and take a look at our individual currencies. This is the US dollar daily activity index. We can see an upward trend and upward intraday bias for the US dollar. That is despite the ongoing showdown in Washington, D.C., where the federal government remains closed. Of course, as we said, we will not see non-farm payrolls to data out today in the U.S. They have been delayed on account of the U.S. government shutdown. We expect additional Fed speakers will be on the tape today, basically indicating that if the government shutdown persists longer than expected, it will be quite difficult for them to get an accurate read on economic data, and therefore very difficult to begin the taper of the Fed's quantitative easing programs. You can see the euro has sold off and is trading lower today against other currencies. The euro daily activity index here is underwater. Yesterday, the European Central Bank voted, actually on Wednesday, the ECB voted to keep monetary policy unchanged. ECB President Draghi indicated that he will promote additional liquidity in the banking system as required. So we expect LTROs and perhaps some additional easing measures, liquidity injection measures in the Eurozone later this year. In Japan, we see the yen is above the neutral blue line here. It has been that way for a few trading sessions, so the yen is adding to recent strength. This upward trajectory in the yen comes on the day when BOJ voted to keep policy unchanged. The BOJ did not need to increase quantitative easing measures at this point in time, as indicated by BOJ Governor Kuroda. British pound is the major decliner today. We can see a monstrous move lower for the pound. We have not seen this type of intraday weakness in the British pound since July of this year. Pound is basically coming off as traders are scaling back their interest rate expectations. The short sterling futures market had been at odds with Bank of England policymakers over the recent weeks. Bank of England continues to indicate that it does not expect any sort of rate hike before the third quarter of 2016. It has linked a rate hike to a move lower in the unemployment rate to the 7% level. The bond market, of course, expected move higher in rates as early as Q1 2015. So this move lower in sterling is partially a capitulation by bond market traders and bond market vigilantes concerning interest rate expectations in the UK. UK economic data have recently been decent, but they have pulled back from recent multi-month highs. Swiss franc is an interesting currency to watch today. We see a downward bias here for the Swiss franc, trending lower. The big news out of Switzerland today is a big foreign exchange investigation launched by FINMA, the Swiss regulator. FINMA is indicating that it is a multi-jurisdictional investigation involving many financial institutions. The presumption is that the financial institutions have been attempting to influence benchmark foreign exchange rates. So we will keep our eye on that, and we will see if there is any impact on the Swiss franc, given that the investigation seems to be headed by the regulator in Switzerland. We mentioned the Australian dollar is the outperformer today. We can see a very significant intraday upward trend and bias to the Australian dollar. The markets and traders have recently pared back their expectations concerning rate cut by the RBA. At least 62% of the market, according to swaps, now predict that the RBA will not ease policy in December. Markets now expect the RBA to push rates lower starting in February and then following with a move in May. Also, some large Australian banks have increased their forecast for the year-ending rate of the Australian dollar. Westpac, CBA, and NAB now see the dollar trading around 94 to 95 US cents at the close of 2013. Canadian dollar has improved here, and it has a nice intraday bias upward for the first time in several trading sessions. We'll see if the loonie can continue that move higher on the back of upcoming Canadian data. Finally, the New Zealand dollar has a little bit of an upward bias here today. RBNZ is expected to raise interest rates by at least 25 basis points before July 2014. Let's go ahead and take a look at some action on some majors and some cross rates. Here we can see the Australian dollar moved lower to test the 84.41 area. This is the daily chart of the Australian dollar against the Swiss franc. So Aussie came off a little bit during the Australian session, tested this 84.41 red support line, and then moved higher to test resistance up around 85.04 and 85.18. Those are both Fibonacci resistance levels. So a very nice technical trade here today. Any additional buying pressure on this cross, we would expect a test of the 85.54 area. That's this resistance line here, also coinciding with a daily moving average, followed by a test of the 85.82 area on any follow-through. This is a daily chart of the British pound against the Japanese yen. You can see sterling continues its move lower. It did not put up much of a fight around the 157.02 Fibonacci area up here. It is approaching this major uptrend line. We'll see what is in store for sterling yen on this daily chart at this uptrend line here. Below that area, of course, we are going to look for a test of the 155.22 area, and then any further selling pressure will need to contend with the 153.76 area here. Moving over to the Euro New Zealand dollar daily chart. Maybe it's not a common cross rate that a lot of people trade, but we can see some good action here today. You can see that Euro moved higher to test resistance again up around the 164.36 area here. That's this yellow horizontal line, and then came off to stop just short of testing a 163.55 area down here. That is this red support line here. So a nice technical move by Euro Kiwi today. Finally, we have the US dollar Canadian dollar chart here today. We can see that the pair was locked in between some support and resistance areas. We can see on the upside, US dollar was unable to move above the 103.38 area up here. And on the downside, dollar Canada found support around 103.22. We thank you very much for watching our Forex and CFD market focus report for today.